Welcome to Illuminati Silver. We tell you the truth about silver. Today is Tuesday the 6th of December 2016 and we're briefly addressing the question, could Italy set off a European banking crisis? In our last two videos on the subject, entitled Renzi Resigns, End of the EU, How Does Gold and Silver React? And Could Italy's referendum destroy the EU and cause gold and silver prices to rise? We stated that the defeat and departure of Prime Minister Matteo Renzi threatened to plunge Italy into a new phase of political uncertainty and possible economic turmoil. A crisis of investor confidence could indeed develop, which may derail a rescue scheme for Italy's most indebted banks, triggering a wider financial crisis across the Eurozone. So how bad is the situation? Well, Italy's banks have an estimated 360 billion euros worth of contaminated loans, with limited, easily realizable security on their books, that for years they've been trying to restructure. UniCredit, the country's biggest and most important lender, has been looking to raise as much as 13 billion euros in fresh capital and offload 20 billion euros in bad debts. Most vulnerable is Banca Monte dei Paschi di Siena, the world's oldest bank and Italy's third largest, which has the most bruised balance sheet and which requires at least 5 billion euros. A market crash would make it much harder for these banks to raise fresh capital, especially if it rattles consumer confidence in Italy, triggering a run on deposits. It could leave the Italian central bank having to provide emergency support to the banks in the form of rescue loans. Putting aside the EU rules on bail-ins, which were put in place since the financial crisis, which would oblige savers to write out cheques to help save the banks, robbing the economy of spending power and potentially further depressing growth. There would also be the potential of contagion, due to the interconnectedness of the continent's banking system throughout Europe. UniCredit, for example, owns Hypovereinsbank, Germany's fourth or fifth largest bank. Banca Nazionale del Lavoro, Italy's eighth largest lender, is owned by BNP Paribas, France's biggest bank, while Cariparma, the country's 11th largest lender, is owned by Credit Agricole, another French bank. Deutsche Bank, Germany's largest bank, also has a substantial Italian subsidiary. That said, some analysts believe that the bad news is already priced into the market, with shares of Italy's banks already having fallen by nearly 50% this year. It is also being argued that the EU's rules on bail-ins should be relaxed, on the basis that the European Central Bank is already spending 80 billion euros every month on asset purchases to help support demand and bank lending across the Eurozone. Just directing 1 month's worth of that funding towards propping up Italian banks would be more than enough to park the problem, but would of course antagonize taxpayers in countries like Germany and, for that case, the Netherlands. It is certainly going to be a nervous time for market watchers and investors. Nevertheless, we do not believe this is going to spark the much heralded crisis many would have you believe. The SHTF scenario is extremely unlikely. The end of banks as we know it is not going to occur in 2016, nor do we believe in 2017 for that matter. There are plenty of contingency plans in place to smooth over these problems, at least for the time being. We do, however, see it as another obstacle for the EU to get over, and another incentive to increase the momentum for those opposed to the euro. At the time of producing this video, gold stands at $1,169, down just $8 from the start of the week. And silver stands at $16.74, just down by 1 cent. We hope you have found this video interesting and informative, and if so, please give it a thumb up and share it on Twitter. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe as a free member for regular email updates and offers. Our Facebook page, which is updated daily, can be found at facebook.com/illuminatisilver. Disclaimer. Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.